Right now, as you are watching this video, hundreds of thousands of landlords and freelancers across the UK are breaking the law. Not intentionally, not dishonestly. They are breaking the law because the rules changed, and nobody told them. And HMRC knows this. They have the data. They know who is compliant and who is not. And they have already built the penalty system that is waiting on the other side of this ignorance. This is not a scare tactic. This is a warning. And the fact that you are watching this video right now means you are one of the people who will not get caught out. Welcome to NestPath UK. Today we are talking about the most significant change to UK tax rules in nearly 30 years. And if you are a landlord, a freelancer, a sole trader, a contractor, or any kind of self-employed person in the UK, this video is not optional watching. It is essential. Stay with me until the very end, because the steps I am going to give you in the final section of this video are exactly what you need to do, in the right order, to make sure you are protected, compliant, and ahead of every deadline that HMRC has set. Let us start with the headline. From the 6th of April 2026, which has already happened, the UK tax system changed fundamentally. The old way of doing things, gathering your receipts in a panic every January, submitting one annual self-assessment return, paying your tax bill, and moving on, is over. At least it is over for the people who are now inside the new system, and the number of people affected is enormous. HMRC estimates that over 860,000 sole traders and landlords are required to comply with the new rules from April 2026. And research shows that only 30% of those affected are actually aware that the change exists. That means roughly 600,000 people who earn over £50,000 a year from self-employment or property, are potentially non-compliant right now without even knowing it. If you are one of them, this video could genuinely save you hundreds or thousands of pounds in penalties. And if you are already compliant, brilliant. Stay with me, because there is still a huge amount in this video that will help you navigate the system more smoothly. So what exactly is this change? It is called Making Tax Digital for Income Tax Self-Assessment, or MTD for ITSA, if you want to sound like you know what you are talking about at your next accountant meeting. And it is the government's biggest overhaul of the income tax reporting system since 1997. That is not hyperbole. That is the actual comparison being made by tax professionals across the UK right now. Here is what changes. Under the old system, you reported your income once a year. A single self-assessment return submitted by the 31st of January. Under the new system, you report 4 times a year, every quarter, plus a final end-of-year declaration, 5 submissions instead of 1. Each quarter, you summarize your income and expenses digitally and send that information directly to HMRC through approved software. Not through a website form, not through a spreadsheet you email somewhere, through software that is officially recognized by HMRC and that connects directly to their systems. The first quarterly deadline for the 2026 to 2027 tax year is the 7th of August 2026. That covers income and expenses from the 6th of April to the 5th of July. After that, the deadlines fall every 3 months, November, February, and May. And at the end of the tax year, you still file your final declaration by the 31st of January, just as you always have. Except now, your software will already hold all the quarterly data, making that final submission significantly simpler than the January scramble you are probably used to. Now, who is affected right now in April 2026? If your qualifying income from self-employment, freelancing, or property combined before expenses exceeded £50,000 in the 2024 to 2025 tax year, you are in the first wave. You are legally required to be using Making Tax Digital from the 6th of April 2026, not from next year, not when you get around to it, now. And this is critical. Qualifying income means your gross income, not your profit. If your rental properties brought in £60,000 in total rents, even if your mortgage, maintenance, and letting agent fees bring your actual profit down to £20,000, you are in scope. It is the gross income figure that triggers the requirement, not the net. Now, here is where it gets more complicated, and more important to understand for those of you who are watching and thinking, My income is below 50,000, so this does not apply to me yet. Pay close attention. From the 6th of April 2027, just 1 year away, the threshold drops to £30,000. That brings in hundreds of thousands more landlords and self-employed people. And from April 2028, the threshold drops again to £20,000. At that point, the vast majority of UK landlords and freelancers will be inside the Making Tax digital system. This is not a pilot program. It is not going to be reversed. It is the new permanent reality of UK tax reporting, and it is coming for everyone. Let me talk about the penalties, because this is where the real stakes become visible. HMRC uses what they call a points-based penalty system. Every time you miss a quarterly submission deadline, you receive 1 penalty point. Points are cumulative. Once you reach 4 points, an automatic fine of £200 is triggered, and once you have been fined, those points only clear after 12 months of full compliance, meaning you cannot just submit everything late, pay the fine, and reset. You have to earn your way back to clean status through consistent, on-time quarterly submissions. On top of the point system, if you fail to use compatible software altogether, if you just ignore the whole thing, there is a separate financial penalty for non-compliance with the digital records requirement. And if you fail to provide records at all, fines can reach £3,000. These are not token amounts. HMRC is serious about this transition, and they have built a penalty architecture that reflects that seriousness. Now, the good news that you absolutely need to hear, especially if you are in the first wave and you are feeling panicked right now. HMRC has confirmed a soft landing period. For the first 12 months, the entire 2026 to 2027 tax year, penalty points will not be issued for late quarterly updates. This is the government's acknowledgement that there will be a learning curve, that people are going to miss a deadline or two while they are getting used to the new system, and they have built in some breathing room. But here is what the soft landing does not cover. It does not extend to your final end-of-year declaration. If you miss the 31st of January 2028 deadline for your first full MTD tax year, you are immediately in the standard penalty regime. No soft landing, no grace. And the soft landing only applies to late submissions, not to the requirement to use compatible software, and not to the requirement to have registered for MTD in the first place. You still needed to register before April 2026 if you are in the first wave. If you have not done that yet, that is your most urgent action. Let me talk about the software piece of this, because it is the part that causes the most confusion, and frankly, the most unnecessary anxiety. The requirement to use HMRC recognized software sounds intimidating. Many freelancers and landlords I speak to assume this means expensive, complicated accounting systems that require training and a dedicated hour every week just to operate. That is not the reality. There are full accounting packages like QuickBooks, Xero, FreeAgent, and Sage, all of which offer MTD-compatible versions and which will handle quarterly submissions automatically once your records are kept up to date. But there are also simpler, more affordable tools specifically designed for landlords and freelancers with straightforward finances. Some are free. HMRC has a full list of approved software on their website, ranging from enterprise-level accounting platforms to lightweight apps that cost a few pounds a month. You do not need the most expensive option. You need an option that is on the approved list that you will actually use consistently. Here is something that is a common misconception, and I want to clear it up directly. Some people believe that because they currently use a spreadsheet to track their income and expenses, they cannot use MTD because spreadsheets are not approved software. That is not entirely true. There are what are called bridging solutions, software tools that connect your existing spreadsheet to HMRC's MTD systems and submit the data in the required format. So if you have a well-organized spreadsheet system that works for you, you do not necessarily have to abandon it. You may just need to add a bridging layer on top of it. Speak to your accountant or check the HMRC approved software list to find bridging tools that work with your existing setup. Now let me talk about something beyond the mechanics. because I think the real opportunity in making tax digital is being almost completely missed in every other video and article I have seen on this topic. And that is the financial clarity benefit. Think about how most self-employed people and landlords currently manage their tax position. You spend most of the year with no real idea of what your tax bill is going to be. You might have a rough sense. You might have set aside a percentage of income. But the actual number? That January revelation when your accountant sends through the self-assessment calculation? For many people, that is either a relief or a stomach drop. And the stomach drops, the unexpected bills, are what cause real financial stress. Under Making Tax Digital, because you are recording income and expenses every quarter and submitting them to HMRC, you and your accountant have a much clearer, real-time view of your tax liability throughout the year. You know by August roughly what your tax position is for the year. By November, it is clearer still. By February, you are not guessing anymore. You are managing a known number. You can set aside exactly the right amount. You can make decisions about expenses or investments before the year ends, when you can still affect the outcome. This is what proper financial management looks like. An MTD is essentially forcing landlords and freelancers into it whether they like it or not. And here is the other side of that coin that I really want you to hear. When you are keeping clean, up-to-date digital records quarterly, you are much more likely to capture every allowable expense. That repair bill from last October that you forgot about when you were scrambling through receipts in January. The mileage you drove to inspect a property that you never logged. The professional subscription you renewed in the summer and forgot to include. These small missed deductions add up to real money. The discipline that MTD requires is the same discipline that maximizes your legitimate tax efficiency. The two things are not in tension. They go together. Let me now give you at NestPath UK the most practical thing you need. A clear, ordered sequence of exactly what to do if you have not yet got yourself ready for making tax digital. Step 1 is to check your income threshold. Go back to your 2024 to 2025 tax records or ask your accountant and confirm your total qualifying income from self-employment and property combined. If it was above £50,000, your MTD obligation started on the 6th of April 2026. If it was between 30 and 50,000, your mandatory start date is April 2027. If it was between 20 and 30,000, it is April 2028. Step 2 is to register for MTD. If you are in the first wave and have not yet registered, this is your most urgent action. You register through the HMRC online portal using your existing government gateway login. If you work with an accountant, they can do this on your behalf through their agent services account. Contact them today and confirm it has been done. Step 3 is to choose your software. Visit the HMRC website and review the approved software list. Talk to your accountant about what they recommend and what they are already using. Make your choice and set it up before your first quarterly deadline on the 7th of August 2026. Step 4 is to start your digital records from the 6th of April 2026. Every transaction from that date forward needs to be recorded digitally in your approved software, not retrospectively, not in January, continuously as it happens. Set a habit, weekly or even daily if your transaction volume is high, of logging income and expenses in your software. Step 5 is to set your quarterly deadline reminders. The 4 quarterly submission deadlines are the 7th of August, the 7th of November, the 7th of February, and the 7th of May. Put these in your calendar right now. Set a reminder 2 weeks before each one so you have time to review your records, check for anything missing, and submit with confidence before the deadline. Step 6, and I cannot stress this enough. If you do not already have an accountant or a tax professional who understands MTD, now is the time to engage one. The quarterly reporting requirement means more frequent touch points, and a good accountant can manage the entire MTD process on your behalf while keeping you informed of your real-time tax position. The cost of professional support is almost always significantly less than the cost of getting it wrong, in penalties, in missed deductions, and in the stress of navigating HMRC enforcement on your own. One final thing I want to address, because some of you will be watching this and wondering if there are any exemptions. Yes, HMRC does allow exemptions from MTD in specific circumstances. If you are digitally excluded, for example due to age, disability, religious beliefs, or genuinely living somewhere without internet access, you can apply to HMRC for an exemption. These applications require supporting evidence and are assessed case by case. If you believe you qualify, you can find the exemption application process on the gov.uk website. But if you are watching a YouTube video right now, it is fair to say digital exclusion is unlikely to apply to you. So plan to comply, not to be exempted. The UK tax system is changing, fundamentally, permanently, and at a pace that is leaving hundreds of thousands of landlords and freelancers behind. But here is the truth I want to leave you with. This change, though it demands effort to adapt to, ultimately makes your financial life more organized, more efficient, and more in your control. The January panic, the mystery tax bill, the scramble for year-old receipts, these are the things that making tax digital ends. The discipline it requires is the same discipline that builds genuine financial strength. Do not be one of the 600,000 people who ignore this and face the consequences. Be one of the 30% who acted. Be one of the people who, a year from now, looks back and thinks, I am glad I watched that video on Nestpath UK. If this video helped you today, please give it a thumbs up. It genuinely helps this channel reach more landlords and freelancers who need to hear this message right now. Subscribe to Nestpath UK if you have not already. Every week we cover UK tax, housing, immigration, and everything else that matters for building a smart financial life in the UK. Drop your question in the comments. Are you already using MTD software? Are you a landlord just finding out about this for the first time? Or are you a freelancer below the threshold wondering whether to prepare early? Tell me where you are. I read every single comment. And your question might just become our next video. Thank you for watching. Stay compliant, stay ahead, and I will see you in the next one.